What's going on, guys? It's Justin from Push and Profit. Hope you're having a beautiful day today. So in this video, I want to talk about Robinhood, right? Now, I made videos about Robinhood on this channel quite often, especially when I first started this channel. And to be honest, Robinhood was the first brokerage I used when I first got started in trading back in 2016, right? So I just want to put that out in the open right there, just to have you guys have a little background of where I'm coming from. Now, over the years, Robinhood has gotten into a lot of trouble, right? I mean, I'm not going to even go through everything that's happened over the years. But there's been a lot of bad incidences that has occurred with Robinhood. But at the end of the day, we do have to acknowledge that Robinhood really did something really revolutionary for the trading industry in a sense that it provided commission-free trades in a time where, that was unheard of, right? And then it pushed, the boundaries by making this such a normal practice that a lot of other brokerages and started to follow suit and offered free commission. So we have to thank Robinhood for that. But the thing is, Robinhood has been having lots of issues. I'm talking about technical issues. They've done kind of really bad things in the past. And it's just been a terrible experience. And now we have some new drama with Robinhood. Again, nothing new with Robinhood, right? Where we have this whole GameStop short squeeze situation and Reddit, right? So I'm going to give you guys a little bit of a background story of, what is actually going on, because a lot of people are getting misinformation from here, and there. And some people are providing good information, but I'm just going to kind of break it down really basic, right? So we have GameStop stock, right? Which is obviously not doing really well because of the pandemic. It's selling off, right? So naturally, when something like that is selling off, you're going to want to short it, meaning you profit from it going down, right? So you're putting this pressure, the selling pressure into the market. So, a lot of hedge funds, they're shorting GameStop, right? Cool, right? Normal. Now, what happened is we had this Reddit group called Wall Street Bets that mentioned, hey, if we start putting buying pressure into, GameStop stock, what's going to happen is we have all this selling pressure, but once we start buying into it, it's going to cause buying pressure, right? And whoever is shorting that stock is going to get like this margin call, right? Where essentially they're going to have to either close their position, and when you close a short position, you have to buy because it's reverse, right? When you buy a stock starting, right, you buy it low, you sell it high. When you short a stock, you sell it high and you buy it low. So you're just reversing it. So if you have this buying pressure and you're shorting the stock, it's going to force you to get a margin call where you're going to either have to add more funds to that trade to continue shorting it, or you're going to get squeezed out and be forced to buy, right? So that's essentially what a short squeeze is. So we have this, Reddit of Wall Street Bets saying, okay, let's go ahead and just put all this buying pressure into GameStop stock. So then we have a lot of retail investors, buying in, putting this buying pressure. And then we have these big hedge funds who, because the stock is going up just a little bit, it doesn't take that much to move such a small stock like GameStop at the time, which was very low valued, to push up. And it caused these hedge funds to lose billions of dollars because what they're doing is they're shorting the market, and then they see them losing. They're losing money, so they close and cover their short position. So now that projects the stock to go up higher, right? So to kind of give you guys a better explanation, picture a rubber band, right? I wish I had a rubber band around me. I just don't. But if you have a rubber band and you pull it back, right? With all this pressure, you're shorting it, right? You're pulling it back, pulling it back, pulling it back. If there's some buying pressure, picture the rubber band releasing, right? What's going to happen? That rubber band, once it releases, it's going to shoot out, right? So we have GameStop stock being shorted by all these hedge funds. We have retail buying into it massively because of a big community. And so the stock skyrockets, right? And so what happens with the stock skyrocketing is that these hedge funds, like I said, are losing billions of dollars. And so what ended up happening was Robinhood ended up banning or disallowing people to even trade into GameStop, right? They were not allowing people to even sell out of their positions. They weren't even allowing people to buy into GameStop. So, because of this, it brings back more selling pressure, right? So that these hedge funds could continue shorting and make their money back, while retail investors have no opportunity to even trade in this free market, which is really unfair. So that's bad. And now Robinhood said they're doing this to because the markets are very volatile. But the real story on why Robinhood does this is because one of Robinhood's main investors is Citadel. And I'm not sure if I'm pronouncing it correctly, but that's who they are. And so they own 40% of Melvin Capital, which is a hedge fund that was losing billions of dollars because they were shorting GameStop, and then retail traders pushed them up, making them lose, right? So there's this conflict of interest where, Robinhood is going to want to stop retail traders from trading so that there's no more buying pressure, so that these hedge funds could continue shorting, make their money back, and then, do whatever they need to do, but so that they don't lose billions of dollars, right? Now, again, it's not 100% Robinhood's fault. It's just that their clearinghouse, which is Apex, which is, handled by Citadel, it's just that they control the transactions from Robinhood, right? But Robinhood didn't fight against it, right? So we have Webull, which is another broker who fought against this, right? And they allowed people to still trade GameStop, BlackBerry, and all these other stocks that are being mentioned on these forums, right, for Wall Street bets. So essentially, we have Robinhood having this conflict of interest, working, with these hedge funds who were not really with the hedge funds, but, with the Citadel, who is, partly an investor in these hedge funds, right? So what happens is that it's stopping the free market and not making a competitive and fair game for everyone. And I just find it very ironic because, the whole platform, the name of it is called Robinhood. And if you know the story of Robinhood, it's robbing the rich and providing for the poor. But ironically, in this scenario, it seems to be the opposite, where when we have, the rich, which are the hedge funds losing money, we have Robinhood kind of interfering because of their conflict in interest, making retail lose money because they're not able to have a free competitive market advantage, right? They're not able to do whatever they want to, like a regular, free market. And so essentially, Robinhood is really just robbing from the poor and providing for the rich. So there's this conflict of interest. Now, again, I said this in other videos, but Robinhood isn't the best platform to trade anyways. I think Robinhood is a great platform to invest. But at the same time, with all these problems that keep arising with Robinhood, at this point, it doesn't even make sense to really have your capital in Robinhood. If you want to invest, there's plenty of other brokerages out there. I think what Robinhood really excelled in is making their interface very simple for beginning investors, because I probably would not have gotten into stocks had Robinhood not provided this, nice, simple platform, right? It probably would have been a harder barrier for me to learn how to, look at Webull or look at platforms like TD Ameritrade or Tastyworks, So I think Robinhood has this nice interface, but at the same time, I think right now there's so many resources on learning how to trade on these other complicated brokerages that it just makes no sense to stick to something just because it looks nice, clean, and simple, but it's providing all these problems when you could go to something that isn't providing as many problems. And, it may be more complicated to learn how to trade on TD Ameritrade. I have a tutorial on that, by the way. It may be more complicated to trade on Tastyworks. I have a tutorial on that, by the way. And it may be complicated to trade on Webull. I have videos on that, by the way. But anyways, even without me having these videos, there's so many resources online on how to trade with these other platforms that it just makes sense to just leave Robinhood. Now, at the end of the day, you could stay with Robinhood. I'm not telling you guys that you absolutely have to leave. It's not mandatory. Again, the choice is up to you. But it just seems that, with the conflict of interest that's recently occurred and then all the previous incidences with Robinhood, personally, I wouldn't feel safe having my money in Robinhood. And then I just saw a story that just recently came out with Robinhood that they're really just living off a credit line. So just the company is just doing bad. I don't know what's going to happen when they IPO. They're probably going to make a lot of their capital from going public. But at the end of the day, who's going to want to even invest in a company like this when all these problems are arising, right? I mean, not me, right? I'm not going to even, invest in Robinhood as far as like when it IPOs. But anyways, that's just going on a different tangent. Regardless, if you guys are interested in maybe going to a different platform, I recommend, checking out other platforms. Again, I do have a link in the description where if you sign up with Webull with my code, you'll be eligible to get 1 free stock. Actually, right now they're doing a special promo where you could get 4 free stocks valued up to $1,600. Now, that promo is not always there. Typically, it's just one free stock, but if you want to take advantage of this promo going on now, go ahead and click that link in the description below, follow the instructions, and you'll receive 4 free stocks valued at $1,600. When I first signed up with Webull, I got a free share of Google that was worth $1,200. I believe Google now is worth $2,000. Don't quote me, it's around there. But it's definitely a great platform. I think they have better tools than Robinhood does, actually. And on top of that, Webull hasn't been having all these problems that Robinhood has been providing. So if you're someone who's, getting frustrated with Robinhood, I would recommend, definitely checking out a different brokerage, and possibly just leaving Robinhood. Again, that's not mandatory. It's just what my opinion, but definitely check that out. Again, guys, my name is Justin from Push and Profit. If you really liked this video or learned anything new, consider hitting that like button, consider subscribing, hitting that notification bell. And with that being said, let me know in the comment sections down below, what are your thoughts on Robinhood? And are you planning on leaving Robinhood? Just tell me what you guys think. I'll try to reply to you guys. I'll try to reply to everyone. But with that being said, hope you're having a beautiful day, and I'll see you on the next video.